Hello, good morning. You're watching Market Cafe on ET Now with me, Vinny Motiwal. Along with me is Ankita Saxena as well. Ankita, very good morning to you as well. Indian market, surely yesterday we opened up the week on a strong footing. Not a weak footing, strong footing. But U.S. markets, they were shut. But what is the other handover that we are getting in from the other European markets? What's the scenario looking like today?
That's correct, Vinny. So, U.S. market was shut on the back of Memorial Day, but the stocks extended their gains. The stock futures are up right now from Friday because we are finally reaching some sort of a conclusion for the debt ceiling. So stock futures are up as of now. If you look at the stock futures, the Dow Jones stock futures are up 0.1%, S&P 500. 0.2%, and Nasdaq is up 0.3%. Now, this is coming on the back of the fact that, last night, Biden administration and the Republican lawmakers reached a tentative deal on raising the U.S. debt ceiling, and Congress is also set to vote on the legislation as of Wednesday. So, on the back of that, the stock futures are up and extending the gains coming in from the Friday handover. Let's look at the European markets. European markets were closed. The UK was, of course, shut on the back of a public holiday. But the other European markets were mixed. If you look at Stock 600, it closed 0.1% lower. Sectors ended the reduced trading day mostly close to the flat line, with oil and gas stocks among those that were marginally higher, up 0.2%, and the tech stocks fell 0.7% in trade. DAX was down 0.2%. FTSE ended the day in the green, up 0.7%. So a mixed handover coming in from the European markets.
Mixed handover coming in from the European markets, and as of now the SGX Nifty also, like you can see flashing on your screens, is also indicating a bit of a muted start for the Indian markets as well. But let's move on and talk about how the commodities market is looking like, what is happening over there, and especially in terms of the Brent crude oil prices. Currently this morning Brent crude oil continues to trade around that $77 per barrel mark. Slight bit of an uptick is what we are seeing coming in these oil prices. Now they are edging higher. Overnight also they hedged higher as the markets weighed down in terms of a tentative U.S. debt ceiling limit deal that is coming up. The talks are moving further and forward as well. So yes, that could avert a bit of a default coming in from the largest consumers in terms of oil, and the top consumers for oil. If they avert the debt default, that is surely something that is a positive sign actually coming in for the economy as well. Against obviously Federal Reserve rate hike concerns, that is still something that could weigh on the oil prices. But yes, as of now, Brent crude oil this morning also has managed to open up with gains. WTI crude oil also opening with gains. WTI crude oil at $73 per barrel mark. Talking just a slight bit about gold, because gold yesterday actually reached that $1,950 per ounce mark. That's the closest levels that we've seen and the lowest levels that we've seen coming in for the gold prices in almost 2 months. As of now, slight bit of a recovery for the gold prices. But yes, Brent crude seeing a bit of an uptick, gold a bit subdued in trade, Ankita.
All right, Vinny, then let's quickly take everyone through the cues that we need to watch out for today. First up, from the global markets, we have the U.S. consumer confidence data that will be coming out. In the European market, we have the economic confidence and the Eurozone consumer confidence data that will be coming out. And in the earnings corner, we have HP Inc. that will be reporting its quarter numbers. Now, let's look at back home. We have Apollo Hospitals that will be reporting their quarter 4 numbers today. And in the corporate action, it is the last day to be eligible for dividend for Macrotech developers, Power Grid, SBI. These are the companies for which it is the last day to be eligible for a dividend. And in the fundraising corner, we have Ratan India, Wellspun Corp and Torrent Pharma that will be raising funds. And in some other events to watch out for, Fed will be issuing their Beige Book of Economics survey today. The ECB will also issue a financial stability review, and the European Union and US Trade and Technology Council meet will also take place as of today.
Okay, obviously those are the important events that we're keeping an eye out on. But let's move on and talk about some of the global stories that are happening, what is happening across the globe. And starting with a neighboring country, we have China. As youth unemployment in China rises to a record high, college graduates are faced with taking up low-paying jobs or settle for roles below their skill levels. Official data shows that urban employment in the 16 to 24 years of age hit a record of 20.4% in the month of April. This is about 4 times the broader unemployment rate and amid millions graduating from colleges.
And survey shows that manufacturing activity in China stabilized in the month of May when compared to the previous month. The China Beige Book survey showed that the output picked up notably in May from April, as did domestic and foreign orders. Meanwhile, revenue and profit margins for manufacturers as well as the service and retail sectors witnessed an uptick.
And on to some other important updates coming in. Brushing aside powerful opposition, Turkey's longest-serving leader, Recep Tayyip Erdogan, has resumed power after Sunday's vote. Over a tweet, U.S. President Joe Biden said that he hoped to work with Erdogan on significant global issues as NATO allies. Now, the Russia President Vladimir Putin said that the Turkey's leader's win was, and I quote, the logical result for the dedicated work.
And US President Joe Biden and House Speaker Kevin McCarthy have reached an in-principle agreement on the debt deal and worked to ensure enough Republican and Democratic votes to pass the measure in the coming week. However, what does this deal mean for the US economy going forward? What are the experts making of this deal specifics? Let's hear out what their views are.
We'll probably hear some more noise about, the hard right and the hard left saying, no, they're not going to vote for it. But at the end, I think there is enough of votes that Congress will be able to approve it.
I think it's a great thing because it keeps the politicians occupied in something so nonsensical as that, and keeps them from harming the rest of the economy and the world. So I think to that extent, on a lighter note, it's a great thing to keep them occupied and feel that they're powerful about something at least. But having said that, I think the concept is good for the debt ceiling. It's been abused beyond words because there's nothing called ceiling anymore. The US has got into a 31 trillion debt at this point of time, and it adds up on a couple of trillion every year. So yes, theoretically, it's lost all its significance because the 31 trillion, what ceilings are you talking about at the end of the day? So practically speaking, it doesn't work. But I think as a political tool, it's got a great merit.
Current latest GDP number, which is for the Q1 for US, is about 1.3% growth annualized over the previous year's Q1. Out of that 1.3%, the contribution brought in by the government spending has been almost 0.48%. That's almost 40% of the overall GDP growth is due to the government spending money. So it was absolutely crucial for the US debt ceiling either to be raised, and now we know that it's not just been raised, it's been suspended for over 2 years.
And moving on, in other important news, we're tracking at this hour. The sources are suggesting that American auto major Tesla, along with other companies, have expressed interest over India's lithium reserve auction. Now, my colleague Aishwarya Patil is going to join us to give us more details on this. Aishwarya, take it away.
That's correct. We've learned from sources that a couple of players, both Indian and international, have shown interest towards the lithium reserves that will be thrown open for auctioning by the end of this year. In fact, Tesla has shown interest in participating in India's auctioning of lithium reserves. Apart from Tesla, players like Ola Electric, Mitsubishi are one of the front runners in this mining and auctioning of lithium reserves. These players will soon will be seen among the top domestic and international players bidding for the rights of mining lithium at Jammu and Kashmir. Now, remember that earlier India had found massive lithium reserves of 5.9 million tons in the Salal Hemana area district area of Jammu and Kashmir, and post that we also found large quantities of lithium reserves at Devangana Revant Hill in Rajasthan. Now, why are these mines really crucial? Well, for the EV players, it's absolutely important and will also reduce the imports of lithium that we have been doing for all these years. It is believed that these reserves put together could cater to almost 80% of India's total lithium demand. And exploration, of course, of these lithium reserves is critical for rechargeable batteries. It is a key milestone in achieving India's future in EV manufacturing as well as EV adoption.
And well, moving on then, it is extremely possible that the Sensex could surpass the 1 lakh mark in the next 5 years, says Chris Wood in an exclusive chat with ET Now. He talks about why he's so bullish on India's prospects. Listen in.
You track Sensex more than Nifty, and we've discussed this over several engagements and separate interviews. What to your mind is not the probability but the possibility of the Sensex touching 1 lakh in the next 5 years?
1 lakh is
100,000.
Well, I think there's a huge likelihood that yeah.
I want to hear that loudly.
It's very
You
likely.
say that there's a...
No, that to me is very reasonable. Yeah, very, very easy to see.
So Chris Wood is of the view that in the next 5 years, the Sensex...
Let's put it like this. I would be disappointed if the Sensex had not touched 100,000 5 years from now.
Okay, so I'm going to capture and recapture this headline again. You will be disappointed if the Sensex in the next 5 years does not hit 100,000.
Yeah, absolutely.
It can go above 100,000 also.
Well, clearly, yeah. There is a consensus view on owning banks, but I'm going to still own the banks. I've been running my Asia ex Japan long only greed and fear portfolio since 2002. So I would say in the more than 20 years that portfolio has existed, if there's one sector where there's always been an allocation in an Asian context, let alone an Indian context, it's Indian private sector banks. So to me, that story remains intact. That's the most straightforward story in India. So if there's a global investor who wants to invest in India and hasn't got the bandwidth to invest in lots of stocks, that's probably where they're going to invest. But right now, with the monetary tightening cycle over, the obvious place to add to, at least I think it's over, the obvious place to add to exposure is property stocks. So the property stocks went vertical in 2022.
22, yes.
When we got second half of 22, they went vertical because suddenly the market realized the property upturn was finally happening after a 7-year downturn. Last year they corrected because we're in a monetary tightening cycle, but actually the property market kept the actual physical property market kept recovering. So the moment we get hint of easing, the property market stocks will do very well.
So can I say...
the property stocks will do well.
Yeah, so can I say that Chris Wood is in fact urging our viewers that don't buy real estate, but buy real estate stocks in India?
Well, right now that's the safer trade, but I think they'll both be going up. The other point about real estate is because you had this dramatic, when I say dramatic in its impact, Real Estate Regulation Act, which has caused this dramatic consolidation amongst developers, which means there's a fundamental lack of supply because it's much harder to develop property now from a developer standpoint because you've got to have the balance sheet to keep 70% of the pre-sale cash flow in escrow, which means that the supply is going to be lagging the demand. So I think it's a very straightforward story.
So Chris, your portfolio is in public domain. So I'm going to just read off the names what Chris Wood's model portfolio currently has. It has Godrej Properties, real estate company, GLF, India's biggest real estate company, Macro Developer, India's biggest residential real estate company, and I think there is Century Textiles there, which is also real estate play.
Real estate related play.
Yeah. So you pretty much like 4 real estate stocks, even though the weightage of real estate in the Nifty is very low. You are not overweight, but you are double overweight on real estate.
Yeah, but in my Asian portfolio, I added to the real estate stocks last week.
So when you tell your clients about buying into real estate stocks, do you get a pushback or are they open to the idea?
No, I think the domestic institutions here have always had a prejudice against property business, property stocks, because they don't think it's a long-term business. But actually that's a bit strange because people buy property stocks in the UK market, the US market, the Chinese market. So it's really a question of where you believe we are in the cycle. But it may have been, some of these prejudices against the property companies may have been valid in the past, but this time around, given the very dramatic intervention of RERA, you can only be developing in India as a listed company if you've got a strong balance sheet. So you have a dramatic consolidation, which should be to the benefit of the survivors.
Okay, let's move on. And there has been a sharp rise that we've seen in the a number of unregistered investment advisors or financial influencers or finfluencers, as we call them, from racking in the mohalla or in their heyday to the crisis of credibility currently. They have come a long way. My colleague Bhavya Dua is here to take us through what is happening in this industry, taking a closer look at this industry. Listen in.
Finfluencers, a surging industry of people who market financial products on behalf of other firms, risk being pushed to the edge by the regulators as they air concerns about the threat of influencers on investors via these carefully crafted campaigns on online and social media platforms. Finfluencers raked the mullah in their heyday, but would the good times last longer?
1 year ago, there was like, let's say 10, 15, 20 finance influencers that you can talk about, right? Today, there are like 100, 200, 500 also creators. So you're very confused with who to work with, who to not. And if one creator is not working with you for a particular budget, brands are happy to drop that creator for an alternative.
Now, how much of the revenue comes from which source? So the top 5% of the financial content creators earn 40% of their revenue from online or academic courses and workshops that they build for their audiences. The rest 30% comes from affiliate collaborations with brokerage firms like Zerodha, Upstocks and much more. And then the remaining 30% comes equally from brand collaborations and AdSense on YouTube. So which platform leaves the longest to help influencers reach their audience? Let's take a quick look. So when we talk about earnings via marketing courses and workshops, that comes majorly from LinkedIn and Twitter. But if we look at the earnings via affiliate collaboration with these brokerage firms, then that comes majorly from Instagram as well as YouTube. Now here's how the affiliate collaboration works. So how this works is influencer posts videos on equity trading, provides broker a link with the video, and the viewers can open account, become investors and trade through that link. Then broker gets a commission based on that and pays influencer for the services by brokerage.
We are working with the ministry concerned, the MeitY ministry, and with the Reserve Bank, and clamping down on them like never before, so that we don't get those Ponzi apps taking away hard-earned money. So social influencers, influential influencers are all out there, but a very strong sense of caution is required in each one of us to make sure that we do double-checking, counter-checking, talking with people. Don't go as a flock into something because somebody else has gone and you also go without doing your due diligence. We have to be careful. It's our hard-worked money.
Even though the influencer market in India is growing more and more with more creators joining the force, they're not being able to earn as much as the top 5% of the market does. More and more regulations coming in play for influencers and startups facing a funding crunch. The income for the 95% of influencers have gone down.
All right, then that was tightening the news and finfluencers, but we will move on. We at Times Network are back with a flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda. As we move forward on the path of integrated equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy, but the global one as well. To pursue this agenda, the theme for the year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, and corporate world. So let's get ready to catch all the action on Times Network.
a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Vinny Motiwala. Now, let's move on to news coming in on the domestic front. India reclaims the fifth largest stock market position as Nifty nears life high. What is fueling the market? Well, my colleague Somit is joining us to tell us just that. Take it away, Somit.
Well, if you see, the Nifty Bank Index has hit an all-time high, while the Nifty is just 1% away from its all-time high. So here we analyze whether the top stocks that have the highest weightage on the index could actually lead Nifty to an all-time high going ahead or not. Firstly, on Reliance Industries, if you see, its weightage on the index is nearly 10.4%, and from December 1st, that is when the last all-time high was hit by Nifty, the Reliance Industries is down by around 8%. However, there are multiple triggers going forward, and that is firstly the refining weakness is over, petrochemical businesses are recovering, the demerger of Jio Financial, and then there is a potential listing of the retail and the telecom arm going ahead. Now for HDFC Bank, if you see from 1st of December, the share prices are largely flat versus a 15% gain that we have seen in the Nifty Bank Index. Now HDFC Bank has a weightage of around 9%, while there are triggers like merger completion, market share gains for HDFC Bank, and high growth in commercial and the rural banking segment. When it comes to ICICI Bank, the stock is up just 1.5% as against a 15% gain in Nifty Bank Index. The weightage of ICICI Bank is 7.5%, and the triggers going ahead is the fact that continued growth momentum could be witnessed in the banking space. The earnings consistency could drive to some re-rating for the stock, and the cost growth is expected to moderate given a high base going forward. For Infosys, now this stock is down nearly 20% from 1st of December. The weightage is close to 7%, and there are triggers like mega deal wins. Generally, first half of a financial year is seasonally strong for Infosys, so there could be some big deal win announced that could be a trigger. Along with this, margin, if it stays at the upper end of the guidance, would also be one of the key triggers, and if there is some improvement in the US macro environment, would also be a key trigger for Infosys. Similarly, for TCS, the stock is down around 4%. The weightage is around 4.4% on the index, and along with improvement in the US macro environment, any deal wins and improved utilization would be a key trigger for TCS, which could also lift Nifty to an all-time high.
Okay, and let's just talk a bit on the markets to discuss the factors, the potential headwinds that we could see, and what the market rally means for the investors. Here's an opinion coming in from Aditya Shah from GST Investments, decoding this runway ahead and what should we be expecting.
The market is just getting started. This decade will definitely belong to India. We've seen that 2000 to 2015, up till 15-16, the decade, the 15 years belonged to China, and now it will belong to India. Manufacturing in India is coming and setting up in a very big way, as it has never seen in the last 10 to 15 years. Apple is going to manufacture about $1 billion of iPhone by 2025. One of the biggest things that is really happening, government is pushing on the infrastructure side of it, where Vande Bharat, for example, the Vande Bharat train sets are being rolled out, and we have very aggressive targets. Metros are being made, airports are being made, and a complete makeover of the Indian economy is really happening. India ka time aa chuka hai, and we are very, very bullish. These smaller ups and downs, like the market had seen from 18,000 to about 17,600, they are part and parcel of life.
All right, then with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we go stock specific. Welcome back. You're watching Market Cafe, and it is that time of the show where we get to you all the stock specific news. And for that, we have Ashesha and Mamakshi in the studio with us. But first up, Ashesha, tell us what are the stocks on your radar? What are the stocks that we need to keep an eye out for in today's trading session?
Hi, good morning. So let's start off with a whole host of power companies that reported their numbers yesterday. First up, NHPC, very strong set of numbers. Revenues grew by about 14.1% on a year-on-year basis. EBITDA came in at 666 crores, which is an uptick of 56% on a year-on-year basis. Profit after tax, meanwhile, also seen an uptick of marginal 1.5% on a YOY basis. Apart from this, Torrent Power also reported its numbers, strong set of numbers over here as well. Revenues up 62% on a YOY basis. Adjusted PAT is also up 32%. Margins have contracted a tad bit for Torrent Power. They came in at 18.1% versus 26.5% that the company reported same time last year, but this was on account of increase in power purchase cost that the company incurred in the quarter gone by, and hence margins have contracted on a year-on-year basis. Moving on to Jubilant Pharmova then, of course, the company has reported results. Revenues are up 9%. Company has reported loss this quarter of about 100 crores versus a profit of 59 crores that the company reported same time last year. Apart from this, some US FDA action has also come in with respect to its wholly owned subsidiary, where the company said that its subsidiary has received a communication from US FDA for audit of the contract manufacturing facility of the company that is located in Canada. They say that the facility is now under OAI. It is classified as OAI, that is Official Action Indicated, and it may withhold the approval of any pending applications at this particular facility. So on the back of results as well as US FDA action on this stock, we will have Jubilant Pharmova in focus today. Apart from this, IRCTC also reported its numbers. Revenues up 40%, margins have contracted this quarter. They came in at 33.7% versus 40% margins that the company reported same time last year. Lastly, Sobha, again on the back of its results, revenues are up 70%, margins have contracted a tad bit, they've come in at 9.6%. Net debt, meanwhile, the company says has gone down by about 1410 crores in the last 10 quarters, and this is from internal accruals alone. So on the back of these results that company has reported, Sobha will also be in focus today.
Okay, keeping an eye out on those stocks, Ashesha, thank you so much for that. But Vamakshi, coming to you then, what are the brokerages saying this morning? What are the important ones that we should be keeping an eye out on?
Well, a very good morning to all of you all. Let's first start off with Aurobindo Pharma. We do have a few brokerage notes come on this counter, and most of the brokerages are highlighting that the company reported an EBITDA margin that was a bit lower than what the street was expecting, but the commentary for this counter looks quite positive. The company has come out with a very strong commentary, which is actually hinting towards several near-term tailwinds. The positive margin trajectory that the company has reported has come in despite higher costs. So overall, we have Goldman Sachs as well as Bank of America maintaining a buy rating as far as Aurobindo Pharma is concerned, and both these brokerages have in fact hiked their target price on this counter. The next stock on our radar is Sapphire. We have a note that has come in from Goldman Sachs. They highlighted that the company is investing in several high potential initiatives. They're expecting margin recovery to kick in from the first half of FY24, driven mainly by KFC, but nevertheless they're expecting the growth recovery to only kick in after H2 of FY24. So given all these factors, Goldman Sachs has maintained a buy rating on Sapphire with a target price of 1,700 per share. And lastly, keep an eye out on AU Small Finance Bank. We have a note that has come in from Motilal Oswal. They believe that the business momentum is steady for this counter. The rising cost of funds, however, could pressure the margins a bit. Near-term growth opportunities, they believe, are fairly priced in after the recent outperformance that we did see in this counter, and given the outperformance that we saw, they believe that the current risk reward has now become unattractive. So overall, Motilal Oswal has downgraded its rating on AU Small Finance Bank from buy to neutral, but nevertheless they've hiked their target price from 760 to 830 per share.
All right then, Vamakshi, thank you so much for that. We will be keeping an eye out on all of those stocks that you mentioned. But moving on to the paint sector, that is on the radar of several brokerage firms as they came out with their Q4 results. Now, which companies are they bullish on? My colleague Lisa is joining in with more details on this. Over to you, Lisa.
Yes, almost all the paint companies are out with their results, and Morgan Stanley, on that note, they have released a review on paint segment. They say that Asian Paints will be pursuing an aggressive growth strategy. Berger Paints is expected to see the fastest decorative growth among peers and will be gaining market share gains in FY24. Kansai's decorative growth gap versus the peers, that has narrowed down, and Akzo Nobel is aspiring to be the third largest paint player, and they are currently at the fourth number. Indigo Indigo Paint is also aspiring to be to grow at 1.5 to 2 times of the industry growth. And the new entrant, Grasim, will be seeing some disruption from this company. They have disclosed the location-wise split of its upcoming paint capacity, and they are on track for commercial launch by Q4 FY24. So that was Morgan Stanley on the paint review. And if we come particularly focus on Asian Paints, JP Morgan met with Asian Paints, and the management highlighted, they gave some insights on the outlook. They said that they are highly confident to achieve double-digit growth going forward over the medium term, and that will mainly be volume-led. They will be gaining further market share gains, and that will be through enhanced focus on distribution expansion, project RE segments, waterproofing, economy emulsions, as well as innovations. They recently forayed into the home decor segment, and that is a strategic play for them. They are targeting 8 to 10% revenue salience by FY26, and they also reiterated an 18 to 20% EBITDA margin guidance for the near term. Asian Paints said that they need to stay competitive, and they will be driving investments in the near term for widening portfolio as well as customer reach. So that was on the paint segment, and it will be in focus today.
Okay, Lisa, thank you so much for that. Surely keeping an eye out on all those paint stocks as well. But Ashesha, coming back to you, there were some of the con calls that happened as well, Repco as well as Avalon. What are the key highlights that we are picking up from these two con calls?
Well, yes, first let's start off with Repco Home Finance. It reported its numbers a couple of days ago, and now we have some takeaways that have come in with respect to their analyst meet. They've gone ahead and reduced their FY24 guidance. They say that they've guided for AUM to grow by about 12% in FY24 versus their earlier guidance of 15% AUM growth in FY24. They say that disbursements and sanctions could grow by 20% versus 25% that they had guided earlier. As far as steady state margins are concerned, they've guided for margins at 4.8% versus 5.1% that the company reported in the fourth quarter, and they also said that they've passed on all the price increases to their customers in terms of increase in prices, output prices. As far as state-specific action is concerned, Maharashtra, Gujarat and Kerala, they say will turn around in FY24, and they also plan to open 10 new branches in FY24. So that is as far as Repco Home Finance is concerned. They've gone ahead and reduced their FY24 guidance. Moving on to Avalon Tech then, strong commentary coming in from them. They are confident of growing at 25 to 30% in FY24 with margins in the range of 12 to 13%. They also said that they expect to double their revenue in the next 3 years. They are seeing a lot of traction in the aerospace segment. They also got a couple of purchase orders already in this segment, and they say that they expect these contracts to be long term, and they will continue to aid growth for the company. This particular segment, aerospace segment, will help the company grow over the next 3 to 5 year period. Exports meanwhile are currently facing some headwinds due to inflationary pressure, but overall commentary that has come in from Avalon Technologies is quite positive.
All right, then thank you for that, Ashesha. And speaking of con calls and management takeaways, Suntech Realty and Shobha are also in focus on the back of their con call and earnings takeaway. And for that, we have Vamakshi joining in with more details. Take us through those details, Vamakshi.
Well, yes, let's first start off with Suntech Realty. Now, the company in its con call highlighted that there was a delay in launching the Mira Road project in FY23, which actually led the company to miss its FY23 booking guidance. But nevertheless, the management is expecting sales traction to improve ahead, in fact, for its BKC projects. And the management is targeting 20 to 25% pre-sales growth in FY24. Now, moving on to Sobha, the strong commentary that is coming in for this counter as well. The management is targeting around 15 to 20% pre-sales growth in FY24. In fact, they launched around 4 million square feet in FY23, but going ahead in FY24, they are planning to launch around 7 to 8 million square feet projects, and in fact, they're expecting to sustain a similar run rate in FY25 as well. They're expecting the debt levels to go down further, and in fact, management is only factoring in inflationary growth as far as their pricing is concerned. They believe that they will continue to witness margin pressure in the contractual business for 1 quarter, while they will be witnessing some pressure in the residential segment for the next 2 to 3 quarters. Residential EBITDA margin is expected to improve over 15%, and PAT margin is also expected to be in double digits going ahead. So strong commentary that is coming in from Suntech as well as Sobha.
Okay, strong commentary coming in from both these names. But let's move on to the FMCG space because Hindustan Unilever came out with its annual report last evening. Some of the key highlights. Let's just talk about the financial performance, what's coming in there. The company has seen the 9th consecutive quarter of double-digit underlying sales growth is what the highlight is coming in. They have managed to gain handsome market shares across most of their portfolio. More than 75% of the business is winning both in terms of value as well as volume market share as well. So other than that, the company is also highlighting that they continue to be in terms of the market leaders in tea in both value as well as volume. Moving on to some of the trends that they highlighted in terms of demand trends, they said that there was an impact of the slowdown was more pronounced, especially in the rural markets. Urban growth was something that was leading the growth for the FMCG companies, and specifically urbanization, increasing nuclear family structure, rising affluence is something that will bolster the growth in terms of new demand sectors as coming in as well as premium segments as well. ONDC, that's a comment that is coming in from HUL as well. They are highlighting that they're the first FMCG company actually in terms of participating in ONDC, which is obviously the government's initiative that has come in. They believe that this is a unique, this will give them a unique opportunity to reach out more consumers and more customers as well. Other than that, in terms of other details, traditional trade is something they are seeing a resurgence coming in, especially in neighborhood kirana stores, back on the front foot as well. And they plan to invest a lot more in terms of the route to market and in-store execution interventions in the pharma and beauty channels as well. In terms of outlooks, yes, they're keeping a near-term outlook, maybe could be a bit challenging and remain volatile given the uncertainty in terms of the weather as well as the global slowdown risk. Price volume growth, they expect that to be rebalanced. Market volumes are expected to start seeing a recovery coming in as consumer habits also start improving. Strategy going forward, they'll be focused on driving savings across all the lines of the P&L and driving premiumization, and committed to mid to long-term guidance of double-digit EPS growth, and obviously confident of continuing and delivering consistent, competitive, profitable, responsible growth going forward.
All right, with that, it's time to wind down on this edition of Market Cafe. So Winnie and I will take our leave, but you don't go anywhere. The market will take the action forward. Thank you so much for tuning in.